These are all folks directly involved in the ETF business, which is how a lot of people in the United States and Europe and other places are going to have their interaction with digital assets. And it's a massively mature and distribution-heavy business, and it's not easy. So I think what we want to do is give some people insights into what that distribution process is like, so that when you see these inflows and outflows, you can actually kind of have a sense of what adoption is really happening in the $100 trillion advisor market, which is where a lot of this takes place. So I do want to start with Josh. I had a fireside with your boss at Consensus in Toronto, who painted a pretty realistic and somewhat bleak picture, starting with the shape of the yield curve and the effective policies in the United States and how that was going to affect markets. You told me just in prep that you didn't disagree with a lot of that, and so maybe a macro intro is a great way to get started.
Sure. A lot of markets these days, they get this fundamental. People say, "Oh, there's this PE, PDAS, whatever, right?" When in reality, at the end of the day, a lot of it's liquidity. So you have to ask yourself, do you think liquidity is rising or falling? What knobs are being turned globally? Where are rates? Where do we think rates are going? These are the type of macro questions that a lot of people are asking, right? And we're also looking at, unemployment, the classic stuff, inflation. So if you have some idea of where you think that might be going and what might cause those knobs to get turned, you should try to act on that, right? Like that's what part of investing and trading might be about. So we do have some cross currents. We do have, as you mentioned, specifically like the 10-2 yield curve is uninverting. Typically 12 months after that, we see a recession in the United States. That would be August. In order to get an NBER declared recession, we need 2 quarters of negative GDP. We just had 1 quarter, we're not gonna have another quarter, right? So there's like very specific conditions that have to be met. There's a lot of noise. But at the end of the day, what's happening globally? Rates are coming down, debt is rising, and we're seeing just spend. Money has looking for a home. There's a great liquidity sponge, and that is the crypto universe. And we've seen that obviously with gold. We see it with Bitcoin. We're going to see that with altcoins eventually. But that's, I think, where your mindset has to be is what do you think is happening with global liquidity? I know there's a lot of noise on geopolitics and the Fed, and is Trump going to fire Powell? And right, the list goes on and on and on, but what is the end result on liquidity is the question I think you need to be asking.
That's key, and liquidity in 2022 was really, the tide went out and we saw who was wearing a bathing suit or not, right? So I want to hit Federico and Kyle with the same question. So in your thought process about distributing Bitcoin in particular, about getting people to allocate to Bitcoin, you probably have your favorite macro kind of argument that you swim back to. I mean, I know what ours is, but I'd like to hear, I'll start with you, Kyle. Like, do you have a store of value is probably linked to some macro factor? What's your go-to?
I think when you kind of bifurcate the products that our firms have, and it's ETFs, it's private funds. I think private fund investors tend to be a lot more, obviously institutional QPs. I think their view is very different. They're looking at macro signals much clearer, much more directly. I think when you're talking about the ETF buyers, that segment, yeah, the institutions are involved, but it's primarily a lot of retail, individual buyers. It's some of the advisor channels. So for them, the story needs to be much clearer and more long and buy and hold. So we're talking about really putting your money in something that's sort of in this real asset type bucket, where it's not necessarily protection from inflation, but it's protection from really improper fiscal policies or central bank control. So how do you disintermediate your money or your value from any kind of government control or foreign regime?
That's the strong voice statement, right? That Bitcoin is your life raft, is your inflatable when policies, and it looks like with the current big beautiful bill that's going to have some support. Federico.
Yeah, and I think, and sorry, I think I just add one more thing. I think it's really important not just to bifurcate who the audience is and the type of vehicles, but also Bitcoin and sort of the rest of crypto. Because crypto is fantastic. We love crypto and Bitcoin equally, but they're just so different. And when you're talking to, and I'm sure you guys have the same experience, the vast majority of our conversations, folks say, great, what is the next Bitcoin? Well, they think they're all flavors and carbon copies of Bitcoin. So I think it's understanding who you're talking to and kind of customizing that story for those audiences.
I'm not turning away from it. I realize there's a whole other audience over here, so we're make sure we don't turn our backs to anybody. We will get to that, because that's probably, I think, the biggest headwind in our industry right now. Federico, what's your, and I love bifurcating the audience because that's absolutely correct. What's your go-to for store value quality versus macro environment?
Yeah, no, it's a good question. You know, I think recently what's been resonating the most, whether it's with retail investors or advisors, as Kyle was mentioning, is really this concept of Bitcoin is not a tariffable asset, right? It's not controlled by any sovereign. It's not controlled by any entity in particular. And so that feeling of decentralized power, if you will, really gives a lot of value, right, to new investors that are looking at the asset for the first time. I think it's also, you know, maybe naive of us when we're thinking about the U.S. market to not mention how performance is the absolute best seller, right, in the world. And if you're performing at double-digit asset growth every single year, and you can prove to that, you can point to that track record. And then on top of that, you add some of the decoupling that we've seen between Bitcoin and some, especially in the U.S., that's going to bring a lot of institutional dollars to the market.
Yeah, that's a key point that I want to turn to now, because you all have filings right now in front of the SEC. I know you can't talk about them, but you know what the industry's trying to do is what it was able to do in Europe a few years ago, which is one by one get individual assets regulated so that there can be exchange traded products. So what happens next, right? You know, for an audience who's, okay, we listed this, it trades so much on day one, there are so many inflows, a sales force has to get out there. How are they prepped to do that? I'd like to, I mean, I hate to go down and machine gun the same question, but I do want to hear about distribution is so critical. Maybe performance chasing helps shuffle certain products to the top. How are you empowering or directing your sales force to really go out there and make sure that they're telling the story in an authoritative way? And you know, what do you expect to get back from them?
Yeah, I think there's a few things to think about. You know, I think as an ETF issuer, it's not let's just file an ETF on every single crypto project and see what sticks on the wall. Because I think
although that's a tried and true ETF strategy, let's be honest. But
I think
has been done that way.
The reality is, if you go to a store and you're a vendor, there's only a certain amount of shelf space. And that's the same in financial products. If you know, it's not just our sales teams, but it's the financial advisors, the FAs, the RIAs. They only have a certain amount of time to speak to clients, to educate them on a whole new asset class, a whole new technology. And so to go to market and say, here's 50 new projects, they're all crypto, but they're vastly different. The way they operate, they're different. Their models, some are delegated proof of stake, some are, et cetera. It's a tall order, really. And so you really have to be selective on, let's start with the projects we really believe in that have certain metrics, a path to 100 million users or clear tokenomics where value accrual is going back to the token holders. These sort of no-brainers need to be the first sort of decision point. And then it becomes investor demand. And I think on the ETF side, it may be lost on some of us in the crypto space, but the token could have massive demand. It could be a great token. That doesn't mean there'll be massive demand from the ETF audience because it's not the same audience, right? As an ETF issuer, we're not trying to sell a Bitcoin ETF to Bitcoiners, although it can help in retirement accounts. But we're going after the folks that maybe have not had much exposure or opportunity to Bitcoin to buy that. Maybe those that are never going to download an exchange app. Or even those that maybe buy the token on the exchange, but that's it. That's where their crypto nativeness stops.
Josh, I have a sense that Canary's customers, that you want people to trade these things, maybe not buy and hold them forever, that you're kind of accepting the fact that that's how these ETFs may be used. What's the thought process there? How do you get things going?
Yeah, I'll take a step back and just say that the media does a lot of heavy lifting for us as far as educating what any of this stuff is, right? So if we think about the current environment with stablecoins and the Genius Act and this bipartisan support and talking about the bill and everybody at every conference is talking about stablecoins, right? Everyone's like, oh, stablecoin, right? And then, oh, here's this little thing called Circle in IPOs, and it might have a low float and the multiple might be insane, right? But that's what people are hearing right now, right? So that's kind of in their ear. I think going forward, we're going to see a framework from the SEC that's going to say this asset is whatever, or these characteristics need to be a part of XYZ asset to get listed as an ETF. And that's also going to do a lot of education. That was going to be my point, is between media and education, that's really all, most of what we do at Canary is just educating people. I was just at iConnections a couple weeks ago, which is an alternative asset conference, excuse me. And I was still educating people what Bitcoin was, right? So it's like, people say we're early, but we're really early still, right? So if we're all the way down the line at Injective or something like that, trying to educate who this is for, what does it do, what is the benefit, why do you need this ETF, that sort of thing. That's still very much ever present in every conversation.
And then what do you expect them to do once they have it? Are they gonna, I really want to dig into that a little bit, and then I want to hit Federico on the same.
Yeah, so selfishly for me, I'm a trader. I want assets to trade. A lot of people, for lack of a better term, are sort of cash poor, retirement account rich, and they want to access this stuff. And if that's trading, if that's holding for weeks or months, that's okay. That's okay with us. That's sort of the expectation. If you look at the ETF rollout relative to BTC, that was lethargic for a long time, right? So I would temper expectations for this stuff in the early days. And as we go on, as education gets better, and even as generational shifts happen, we're going to see differences in who's trading which assets, right?
Federico, your firm has tremendous success in Europe, especially with a really long list of products, as does yours. Do you expect similar glide path to success here, or what's and how is distribution going to make that happen?
Yeah, it's a good question. And I think picking up on a thread here from what Josh was saying, we're so early, right? Especially when it comes to the U.S. market education around crypto. People don't know what Bitcoin is, far less any other asset in crypto, for the most part, when it comes to the advisors that we're speaking to. And I think it's important for crypto native crowds to realize that financial advisors in the country control over 2/3 of the total ETF assets. And so this is the biggest buying base long term for these ETFs going forward. And so the educational initiatives that we were talking about are incredibly important for this audience in particular. In Europe, we've been fortunate enough to have a lot of variety in our product suite, and we've been able to come to market with a whole list of, I think, upwards of 45 ETFs at this point, tracking over 25 single assets. And we're looking to replicate the same approach in the US by being that ETF access for investors that want to either trade or want to hold these products long term. Ultimately, though, there's a lot of excitement built up around what an ETF could mean for particular projects, just because of the success that Bitcoin has had. I would argue that Ethereum has had as well in the ETF space. But the reality is that these products are actually just fantastic amplifiers for what the organizations are doing beneath them. And so if there's not a good story to tell on behalf of the ETF, there's not going to be flows associated with those products as well. And so it really comes down to what is the underlying, do these investors understand what the value proposition is, and do they think it's good enough to add to their portfolios? What I would personally argue is the first batch of adopters for crypto ETPs in the US are actually retail investors, as we've seen with Bitcoin. And these are often individuals that are crypto native or crypto adjacent that are maybe holding these assets already in their Coinbase account or on their own wallets, but actually have tax deferred or tax advantaged accounts where they would like to add some exposure as well. And so there's a lot of different client groups that when you break it down into the smaller pieces, you can see different speeds of adoption. But with that big buying group of RIAs and advisors, and especially the wires and these big, massive platforms, these are multi-year journeys, and it's not just for crypto, it's for any asset class for that matter.
Yeah, I was just going to say, coincidentally, I was looking this morning at the top 20 platforms, the wirehouses and the clearing firms. 11 out of the 20 still haven't approved Bitcoin ETFs for solicited. So right now, a lot of them, it's on an unsolicited basis only, meaning the client has to essentially go back and request exposure to that ETF. Whereas the vast majority of money, you want to be solicited, because that's where the money can be included into models. You can actually go as an advisor and say, we think you should have an allocation to this ETF. So 11 out of the 20 still do not have solicited in Bitcoin ETFs. It took us 7.5 years to get a Bitcoin ETF when we first started filing for it, and educating advisors. And to your point, we're still talking to advisors today and saying, what is Bitcoin? What is proof of work? So I think it's an important point you made, sort of, it's not these all get approved, and now suddenly there's going to be $50 billion in this ETF, in this. It's going to be a journey in educating these advisors, these home offices on what these projects are.
Proof of work is the ETF business in general, right?
Good point.
This is key. This is the challenge point, because you mentioned 2/3 of ETFs are advisor-driven, right? And both of you mentioned self-directed retirement money, which is IRAs, which is not defined contribution plans, and it's not pensions, and it's not annuities. It's that sliver of self-directed money. You also mentioned probably adoption starts with retail. All of crypto started as a hobby, basically, for many people. Now we're threading a pretty narrow needle, right? And on the other side of that, we expect advisors to probably, out of demand from clients, start to want to have richer crypto portfolios, realizing the difference between Bitcoin and everything else. Yet, we have a couple of problems. First of all, is volatility is going down, right? And all those people, I think, who want to invest in SUI or Solana, or they want to go 10x, right? And if something doesn't go 10x, do they get bored, right? So let's talk about Bitcoin volatility and other crypto volatility. We expect it, I guess, to continue to decline. Maybe, Josh, I can start with you on this. And does that actually, converse to how we're taught to invest, take some of the interest level out of the asset class?
Yeah, again, if we're talking about retail versus institutional, and they look at the volatility, to them, Bitcoin's like a meme coin to us, right? Like, it's a whole nother planet of volatility. So
well, it used to be, but
right, as assets mature,
yeah.
as Bitcoin has matured, as the market cap has matured, as the market participants have matured. The market participants, by the way, also getting older. Initially I started 13 years ago or something, and it was 20-somethings. Now it's 30-somethings, and you're seeing this generational shift, I think, in attitudes towards trading versus investing and holding and that sort of thing. So I don't think the volatility declining is necessarily a bad thing, just because, if you think about it, since the bottom in 2022, there's still been a decent amount of volatility, and that's the trader in me speaking, not necessarily the options holder or anything. But if you've nailed 4 trades since 2022, you're still doing great compared to anything on the planet, right? So to me, I think there's still plenty of volatility. I think we're still going to see a lot of volatility in closer to Q4 probably than Q3, but there's still some potential tailwinds that'll push us up in Q3. One other quick point I want to make is if we're comparing MSTR to BTC, I'd encourage people to look broadly. And if you look at meme coins versus MSTR, similar, but if you look at meme coins versus leveraged MSTR, they trade exactly the same. So if we're talking about alt season, I know I'm going all over the place, but we're talking about alt season, we're talking about volatility. Where's the volatility today? It's not as much in alts as it is in TradFi products that are levered. And that may be hurting flows for alts.
I'm going to have an MSTR question for you in a minute, so brace yourself.
Okay.
Brace yourself, audience. Okay.
I was going to agree with you, Josh. I think the lower volatility is actually a tremendous benefit to Bitcoin prices right now. And the reason being, these advisors that we're speaking of that are going to come in bulk, they're looking at this as a sign of greater maturity for the asset class. And so ultimately, as they're able to have more predictable outcomes, maybe you don't get the 5x swings within a year, but you also don't get the 50% drawdowns. And they'll be more comfortable when they're a fiduciary allocating on behalf of their clients.
I'm going to challenge that a little bit by saying that, and I'll ask you to either get on my side or the other side, that aside from Sunday, close to close, Bitcoin has observed a 10% range for 50 days since May 7th, which I think is a record, right? Between 101.5 and 111.5. For something that doesn't have its own news story, right? That kind of range, I think, can start to breed narrative exhaustion and can impact sales. I think it's great for stability, but it gives you less to talk about maybe. What do we think? That kind of tight range trading, does that challenge the process of at least having a consistently powerful Bitcoin narrative?
I was going to quickly chime in here. We've still seen double-digit performance for Bitcoin this year. And if you're talking to advisors, and yes, you don't have it over the last 30
You just
days,
pick a different time window.
I think as a long-term investor
that's
myself
right.
and somebody that speaks to long-term investors every day, I think if you have a, let's call it a year to 5 years time horizon, and you're seeing that the ETFs, that the corporates on the balance sheet, and that all these new potential buyers are coming into the market, and long-term holders of Bitcoin are reaching all-time highs, that's encouraging from a performance perspective.
That's cool.
Yeah, I
You
think,
agree? Yeah.
I think this depends on who you're speaking to. So again, a lot of our perspectives on the ETF side and constantly in the conversations, that what we've been challenged over the last 7 years is Bitcoin's too volatile. It's too, the correlation used to be a benefit. Now it's sort of become a lot more correlated to NASDAQ. I think that's a bigger issue now than even volatility. Because if you look at the sort of Bitcoin really essentially over the long term has not been correlated to anything, but it goes through these pockets where it does. It did that to gold in 2021. Now it's to NASDAQ. That's more of a challenge than volatility. But I come from an emerging markets background where, in my view, I'm not afraid of volatility as long as you're getting compensated for that additional volatility, which I think Bitcoin and a lot of crypto traditionally you have. And to me, it's when I talk to advisors and they're actually worried about Bitcoin volatility, to me, it's a sizing game. You can size appropriately in a portfolio, and the overall portfolio is not going to drastically increase in your standard deviation.
Yeah, that's a good answer. I think back to my MSTR question, if Bitcoin realized volatility spends the summer at, 26, 27, feels to me like that impacts the MSTR trade more than anything else, right? Because of how the capital structure works.
So it might. As a trader, putting my trader hat on, I like chaos, I like uncertainty, I like assumptions that are destroyed. So a lot of the holders of MSTR have this assumption that it's going to be 2x BTC forever or 10x, it's some range of MNAV, right? It's like 1.6 right now. There's a lot of other BTC treasury companies that are flying. Again, talking about who is trading which products. It's clearly retail is trading things like MetaPlanet and all the other that are up hundreds of % over a couple of days, right? And that has to hurt MSTR's flows a little bit because it's generally the same people trading the same stuff.
But specifically, like low Bitcoin volatility impacts the converts, right? And the converts kind of underpins a lot of what makes MSTR kind of work, right?
Yeah, so the fuel for MSTR is underlying volatility in BTC, absolutely. So there are periods of time where we're going to see these lull. We're still up about 50% since April or something. The SPY is up 25% since April. We're at all-time highs on the SPY, the NASDAQ, a bunch of individual names. A lot of this is just liquidity sort of moving around, right? First it was gold, then it's BTC. Prior to that it was NVIDIA, and now we're seeing semis take off. We're seeing some of the riskier stuff take off. We're seeing ARK take off. So again, to me, it's just stuff moving around, money looking for a home. And we're seeing it directly with Circle and Coinbase. Circle was up 300%, and now Circle's down whatever it's down, and all that money probably rotated into Coinbase, right? So, it's just these kind of musical chair games, a little bit of money moving around.
When we get through that needle, right, when we thread the needle, come out on the other side, and advisors start to, out of demand, have to put portfolios together, right? They're going to have Bitcoin that serves one purpose. We have the 5 names that the president mentioned, seems like a long, long time ago, right? Bitcoin, Ethereum, Solana, XRP, and Cardano, right? So
did he tweet that, or was that someone else tweeting for him? You know what I mean?
Was
that under duress?
I'd have to scroll
You heard
back.
it here.
Yeah, that's right. What do we start to approach something that looks like diversified portfolios over time, and are those actively managed, and how do the advisors sort of put that together? And if ETFs are the raw ingredients in there, this seems a long time from now, right? But do we get there? Is that where we end? Is that the long-term goal?
Yeah, I think so. I think it's just a maturation of the exposure, right? Because a lot of what we do is, although we have active strategies, a lot of it today, the challenge is just getting exposure in these vehicles that advisors and clients are used to in the US. I think in Europe, there's obviously a lot. He mentioned some. We have over 14 crypto ETNs in Europe. But I think it's the regulators there had sort of a framework where if coins fit and looks like this and passes these metrics, then you can file it and get that. We hadn't had that in the US. And that really has been a gating issue for how can you have an actively managed basket product when all you can actively manage is Bitcoin and Ethereum. I think we'll see that. I think this new SEC administration is looking towards solving that problem, which will obviously lead to the creation of diversified basket products. I think advisors' challenge are probably without that happening, and there are 20 new crypto ETPs in the US without basket products, that's a nightmare for advisors. They're barely wrapping their mind around what Bitcoin is and how it trades. Then to tell them, okay, now also compare that and contrast that with Solana and Ethereum and Injective and all these other great projects, there's no chance, right? So they're going to need to rely on asset managers to provide some of that expertise.
Yeah, I totally agree with Kyle. I think we're headed towards the index or the thematic basket world in the U.S. When that happens or how that takes shape exactly, I think is to be seen. But in Europe, we've definitely seen those products take off, and we've seen the ease of investors coming in using a one-ticker solution to get access to a broader part of the crypto market. So yes, I think that framework is underway, and hopefully we get it at some point here so we can launch a product.
Yeah, and you can see already in the U.S., there are liquid token funds. Right now we have one for qualified purchasers. They've been vastly successful in the U.S. as far as demand, but retail investors just have not had access to those types of strategies. So I think that will be a larger driver of diversification.
No argument from the indexing guy on indexers being the future of the business. That's good. Bitcoin dominance, though, right now, I think it hurts me every day. It just feels like, come on, wake up, right? Now, it doesn't help it doesn't hurt the Bitcoin story, and maybe it doesn't even help hurt some of your distribution conversations because nobody really has a sense of the size of the market and that Bitcoin's 2/3 of it. But gosh, when you're thinking about at least equipping your distribution teams to talk about anything besides maybe Ethereum and Solana, where do you go when these things can shrink away to nothing and just sometimes don't seem like they're a big part of the story?
I'm happy to start. I think the way that we at 21 Shares talk about Bitcoin versus the rest of the digital asset ecosystem is like they're completely different asset classes almost. And so what Bitcoin is doing and the performance that we've seen from Bitcoin is fantastic. That doesn't necessarily take away from the rest of the industry, if you will. And so for us, what we ultimately like to tell investors is when you're taking a stake in Ethereum, Solana, you name the asset, this is an opportunity to get highly liquid VC-style returns in a portfolio. And at the end of the day, if you're a VC investor, 9 out of 10 of your bets are going to fail. So to your point on these assets could wither away to zero, that's absolutely true. The reality, though, is that one that does hit is going to make up your year, it's going to make up your portfolio. And so this is a very unique opportunity at this point, both in the US and globally, to invest in crypto, where you're getting these disproportionate returns for the bets that you make. That's where index products, we think, are super important because it's going to diversify your exposure, and you don't have to go through the trouble of kind of hand-selecting or hand-picking each strategy on your own. But yeah, it's been a frustrating performance period as well for the rest of crypto outside of Bitcoin. And if you look at other risk-on assets, look at a QQQ index, for example, the NASDAQ index here in the US, also struggling this year from a performance perspective. So I'd actually compare those two to an Ethereum, to a Solana, more than I would compare Bitcoin, which I would probably bucket now more closer to gold.
Right.
Yeah, liquid VC was my answer when we're talking to people, and that's how we position it. Clearly, these are new technologies, and there's going to be hair and fur and mold, and there's going to be all this weird stuff, right? Some of it may fail, some of it may fuel the next, whatever of the generation.
Then you have to go pretty broad then, right? You have to kind of reach with both arms wide open if you want liquid VC.
Yeah, so again, I keep going back to the trader hat, but in me, what I want is a product I'm pitching. I'm pitching the audience. This is what you're going to see. I want to see a rules-based SMA or ETF based off of Bitcoin dominance and some trend indicators. When Bitcoin dominance declines, you allocate into a basket of alts, and vice versa. You go maybe 80-20, 20-80, whatever it is. That way you're sort of systematic in your approach maybe a little bit. And I know a lot of people get very emotional about the community they're involved with in a coin. Unfortunately, that doesn't move the needle for prices, right? So becoming a community member is different than seeing results quickly.
Interesting.
Yeah, look, Bitcoin has been a tail that's wagged the dog, right, for a while. And alt season just really hasn't happened from a performance perspective. So it's made conversations more challenging, particularly with the advisor community who are already hesitant on anything beyond Bitcoin. And to a point that was made earlier, performance drives demand, right? There's no question. And the advisor community, that's even more so. Right now, a lot of the advisor firms barely want to talk about Bitcoin. They have basically no interest in anything else. If they start getting calls demanding exposure, that story is going to change very quickly, and then they're going to be looking to us to have those conversations. I think, what's been the challenge, and we have, again, a liquid token fund, is a lot of funds have struggled to even match Bitcoin's performance over the last couple of years. So I think
that's an important point, right? I think almost anything has had trouble over time beating Bitcoin.
Yeah, and I think if you're paying 2 and 20 to not even capture Bitcoin's performance, then it becomes a much harder discussion to have with LP.
Suddenly it is anymore, right?
That's right. Yeah.
Let's go ahead.
No, I was just going to say that's what you definitely need. You need some sort of systematic risk-on, risk-off approach, or
We have one. Call me later.
get out of Dodge.
We
button,
do have
right?
such a thing.
Because
It's
at
been
least
running
based
for
on the
2 years.
swings that we've seen historically,
Yeah, we'll talk.
you got to save yourself from that drawdown a little bit.
How important, I feel like staking and having a yield is one of these things where it really hooks people in who might otherwise not be hooked in, and even if some part of a 3% yield on Ethereum just changes the whole perspective. Is that really a big unlock for investor interest? Maybe I'll start with Federico on that one.
Absolutely. I think if you look at the rest of TradFi ETFs as well, like investors love a coupon. They love some sort of payment related to their investment. So yes, I think it's a massive unlock. And the ability that we have as ETF issuers to pass along those rewards back to our clients through our funds is going to be incredibly important in kind of unlocking both that crypto native crowd that understands that the ETFs today don't actually have staking capabilities, so why would I go that route? But also the TradFi crowd that's thinking perhaps with a different time horizon, but also loves the fact of clipping a coupon every year.
You guys are all nodding, so I'm not going to get any disagreement on the staking thing, right? It's just, but can we agree it's a sales tool?
It's just a strictly better product, right? If you're not staking in
Right.
a sense, you're getting diluted. So
I mean, as an example, you could look back to the launch of the Bitcoin ETFs, and there were a lot of Bitcoiners that publicly supported the ETFs. And some even provided capital and bought into. That's really hard to say support the product, the Ethereum community, the Solana community, when they'd be having to give up 3% in Ethereum or 8% in Solana. It's nonsensical. It's just factually, it's not a viable product.
Right. So how confident do we feel that these will find their way into U.S. ETFs sometime soon? Yeah.
I was going to say 100%. 100%.
Yeah, there's no question. I think, for the last 4 or 5 years, a lot of the headwinds had been regulatory, tax. I think this new SEC administration has been doing a lot. They've been much more conversational and working with the issuers to figure out what those problems are and how do we address them. And I fully expect most of those challenges to be addressed over the 6 to 12 months.
Do we think, I'm really impressed by options activity on Bitcoin ETFs, especially since there are other options markets out there. Do we think options markets start to pop up? And the Ethereum options have been not so interesting. Is the Bitcoin options thing sort of a singularity within crypto options in the United States, do you think? Maybe Josh, I'll start with you on that one.
I'll just say quickly that the treasury companies that are buying outside of BTC may help fuel the options market a little bit in these other coins where it's available, or on the CME or wherever, just because they're sort of like hand in hand, with who's trading what again and why they're there and what they're looking for. And if we start seeing these covered call products pop up as well, that's going to fuel more interest in options for altcoins.
That's a good point. And maybe banks too, with options desks?
Sure.
Yeah. I mean, banks, then you get access to what? Structured products based on the ETFs. You maybe start to get access into annuity products. You have insurance risk that has to start to get hedged out. I mean, this would be a richer environment, right? I mean, that may actually open up a new distribution channel. So are you thinking about that at all, or is it just the retail and advisory path? What have conversations with banks been like?
Yeah, I mean, I think historically there were a lot of headwinds, or at least concerns enough, that pushed banks away from touching crypto. Almost all of them had crypto teams and research teams, but some of the and they may have acted as APs on the Bitcoin ETFs, et cetera, but to actually touch and hold crypto, they've been pretty against it. Years ago, it was fear of reprisal from regulators, and that significantly has shifted since the new administration has taken over. But I still think it's a slow sort of on-ramp. I think over the next few years we'll see that, but still today it's pretty shallow. But I would say one other thing. I know there's been the perps market offshore is massive, and I think we could see the perpetual futures in the U.S. at some point in the near term. So I think the background is we all look at Bitcoin ETF sales and AUM and Ethereum, but there's all this back-end institutional infrastructure that really has been slow to be built in the U.S. that I think is going to accelerate in the next couple of years.
That's a good point on perps. I wish we had a whole nother session for that. Federico, I'll give you the last word.
No, look, we're really excited about what's going to happen in the next half of this year from a ETF approval process here with the SEC. We're keenly focused on getting some of these products up and running, and I think to us, the more optionality we can bring to the U.S. market across all of our firms here is only going to make it a more robust and diverse ecosystem for crypto assets. So we're looking forward to bringing more capital to the ecosystem.
Fantastic. Thank you so much, guys. Thanks, audience.
Thank you, Andy.